The Canadian real estate market may see its deepest correction in 50 years. A lot of the big banks are forecasting a continued correction, but what does that mean for buyers? What does that mean for sellers? In today's Canadian real estate market update, we are going to dig into the data, some of the headlines, and give boots on the ground context to what is actually happening in the real estate market, and it may surprise you. If it's your first time to this channel, welcome. I'm Justin Conico. On this channel, we cover all things real estate from a high level all the way down to all the best locations you could possibly want to live in southwestern Ontario. We show you the good, the bad, and the ugly about neighborhood tours. We bring on expert guests and speakers, so make sure you hit that subscription and that notification button so you don't miss any future episodes. But let's get right into it. The first thing I like to do in these market updates is dig right into the actual statistics. Let me get my face off the screen so you can see this a little bit more clearly. These sales prices in February of 2022 were on average in ITSO about 875. Today they're sitting at about 680. So for context, that's almost a $200,000 adjustment. The actual number of new listings hitting the market in May 2022, 17,000. If I go back to December, there was only 3,500 and change. And you can see that the number of new listings is actually dropping. So this is a really interesting statistic because inventory was flooding the market. Better Dwelling was saying it's not a supply issue. Well, it kind of was because inflated buyer demand caused such low inventory. But now, because there's less demand, so many more people were listing their houses. This is a trend line you want to pay attention to, because as the inventory drops, if the buyers are coming back, it's going to intersect, and that's where things will change a little bit. The actual number of homes for sale in December 2021 was 2,800. This number is 18,000. So if you look at the last stat in this one, there is still a lot of inventory on the market, which is why buyers are in such a good position right now, because they have so many options out there. It is a little disconcerting for buyers to navigate the marketplace when there are so many options. One way that we're doing that here is we're navigating through virtual showings first, really boiling down where the best deals are. And in some situations, only doing deals when they are screaming hot deals. In other situations, looking for opportunity cost in the market, but there is a lot of inventory you have to sift through. The actual number of sales, March 2022, 9,000, and July, 5,137. So sales are still happening, albeit almost half the amount that were happening back in March, but that obviously has to do with the summer as well as the market that we're currently in. Average days on market from February used to be 6, which wasn't really 6. We all know most people would hold offers for a week, so it was almost 0. To today, which is 17. We are looking at a neighborhood by neighborhood area. In some situations, the average days on market is 27, 38, 56. Depends on the price point. Real estate is micro when you're dealing with a specific case study, but macro when you're dealing with statistics. So keep that in mind. Months of supply is actually from December 2021 at its lowest of 0.3, which is insane for the real estate market. To keep in mind, that's like if we didn't list a house after 7 days, we would run out of inventory to sell in the entire city. Now we're sitting around 2.7. 4 months of inventory is what's considered a balanced market, and we're hedging right towards that. But notice the trend line is actually tapering off. So does that mean that the months of inventory is actually going to start tapering off and flatten out? Who knows, but to be seen. The percentage of original price from February 2022, if you listed a house for $100,000, it would sell for $119,000, and today it's 96.8. So that same house would sell for $960,000. And that's from the original price. We are seeing like 2 to 5 price corrections on properties before they're selling, which brings me to my next stat, percentage of list price. February 2022, same thing. List a house for 100 grand, sells for 119. And July 2022, list 100 grand, sells for 97.8. So the 97.8 percentage of list price is a little bit higher than the original price, meaning if it's priced correctly, you're going to sell very, very close to what that range is going to be. If you're a buyer, understand you can be aggressive on your offers, but houses are still selling for 97.8% of list price. If you're a seller, understand if somebody lowballs you, it's not a personal insult towards you. You got to negotiate, and you got to make sure you have an absolute killer that is fighting by your side on the negotiation side. Another stat I don't normally share is actually the matrix system. So this system, if you look here, residential properties in this catchment area, this is a very specific area, but it should give you some insights into what's happening today. The number of new listings on the market today, 27. Conditional sales and pending sales, 12 plus 9. So you're almost at the 27 mark, which is interesting because before we were seeing new listings and no sales. I want to show you the last 7 days. So 172 new listings, 180 sales. So there were more sales than there were listings. That's that trend line that was flattening out on the months of inventory. So if you are one of those buyers that is trying to time the bottom, understand you need to watch these trend lines and the data of what's actually happening today. Even when I do these market updates, we are August 24th, 2022. By the time the next set of data comes out, you're looking at lagging indicators, right? You're looking at the sales that happened last month when the sales that are happening today in the inventory that's getting listed today is more of an active indicator of what's going to be coming down the pipeline. I think we're in the current real estate market that we're in because the Canadian government printed 40% more money than we had. Everybody became independently wealthy, bought landscaping, jet skis. It was absolute mayhem, and inflation got out of control. Now, they've indicated that the inflationary rate above 8% was wild, and they want to target 2 to 3%. The most recent set of data I saw put the inflationary rate at about 7.6%. So it's heading in the right direction. And I think people are starting to feel it. If you go to the grocery store, all of a sudden your grocery bill is $500. You're finding ways to cut that back and cut it in half. The gas pumps, you're starting to see the prices come back down and people are being more thoughtful about where they're traveling. And if you go to any automotive dealership that last year, I mean, people were trading leases like they were day trading stocks. Those dealerships are starting to carry more inventory, and now the buyers are in a better position than they were last year. It's the trend line that we want to see. I actually think it's healthy for the real estate market and for the market as a whole. And I do think if you're too far on the other side of trying to time the bottom and thinking that this is going to continue forever, I think you got your head in the sand. But I also think if you think things are all rosy and buy, no matter what the situation, and you're just one of those agents that can't give advice other than saying buy, you have your head in the sand as well. I think there is a reasonable middle that you need to be in, and you need to be paying attention to what's actually happening today. This is an interesting article that I wanted to share because I think it speaks to the overarching theme of today's update, where you do want to pay attention to the macro, but real estate is micro. So the advice that I would give somebody in Toronto is not the same advice I would give to somebody in a small town. The small towns still tend to be booming with a lot of activity, while Toronto struggles to recover. And that has to do with the workplace. That has to do with people's habits, where they actually want to live and where people are trending to. The other part of this article that I thought was interesting is it says Ontario big cities still haven't seen workplace traffic recover, not even close. I think we've seen that among government. I think we've seen that among some of the larger companies where they are trying to get their people back into the office, but the whole dynamic of what it means to be an employer has changed. No longer are you just punching a clock. People need to find purpose in their work, and they're realizing that they can do it from almost anywhere, which has really opened up the map in terms of where people are looking. So again, if you are looking for real estate in Southwestern Ontario, make sure you subscribe to this channel. We're always putting out these market updates. We're bringing you into the communities, telling you the realities, the pros and cons of what it's actually like to live there. If you're looking for an agent anywhere on the planet, also, our information is below. Reach out to me directly. I can jump on a one-on-one call with you. We have one of the best networks on the planet. And if there's things I didn't cover in this video that you wish I covered, let me know. It's one of my favorite things to do. Just provide information with no ask whatsoever. We're just trying to create a better community and just give you information. So hopefully you got some value from this episode. If you did, jump in the comments. Let me know where you're from. Let me know your opinion about the real estate market. That's what I want to know more than anything, but I also want to know where you're from so we can connect. Thanks again, and I'll see you next month.